She is the Johnny Appleseed, the Juanita Appleseed of rental property investing, JWB, the Not Your Average Investor community. We call her the fairy godmother of our community, the beloved Jen Filzen. Say hello, Jen.
Hello, guys and gals. How are you? I love our family.
Jen, I got to hear your tagline. Do the one thing.
Oh, sorry. May all of your real estate wishes come true. I'm like, which tagline? I have so many.
Let's go. Jen, why don't you give everybody kind of a summary of your background as an investor?
Okay. So for those who know me and have heard my story, forgive me. I have to repeat it for the newbies. Okay. Welcome, newbies. We love you. We are a genuine community. And no, these guys don't pay me to be here. I'm just a truly enthusiastic super fan, right? So anyway, I am indeed from Jacksonville, born and raised, grew up in Orange Park, which is a suburb next to the West Side. So yeah, I know Jacksonville intimately. Back in 2008, I was looking at the Robert Kiyosaki books, trying to figure out in the middle of a recession, how do I invest to have a retirement? Because I'm self-employed. I own a marketing agency. So my husband, Renee, and I, we went ahead and we said, we want to invest in this group called Jacksonville Wealth Builders. And I told my parents, okay, we're going to come out, we're going to buy a property because we're in California now. And my parents were like, I don't know. This sounds too good to be true. So I said, why don't you come with us and check them out with us? And so this is back when they're in this little salon converted office. It was like super awesome. Like everyone was in this weird cubicle. It was so cute. 2012. And my parents ended up buying their first property the same day that we ended up buying our first property. And then my mother would tell my grandmother, you need to do some private lending. So we have 3 generations, my grandmother, who's 99, my parents and us. And my parents were able to retire thanks to what JWB has done for them. So we are definitely passionate about our time with JWB. They are the best. And they take my money. Take my money, Greg. Take it.
Jen, your story, it warms my heart every time I hear it. You can tell that story any day, all day, every day, and twice on Sunday. And I love it. It's the essence of what we are hoping to, the impact we're hoping to have. And so to know that it's not just your trust that we've earned, but it's the trust of multiple generations in the Filzen family. It's just incredible.
My mother is the one that really needed to be convinced. And then, kid you not, here we are 10 years later. And she's like, thank you so much for telling me about JWB. Like, she's always just like, thank you. Thank you. It's huge.
Let's get into Jen's story. We get to like review your history and stuff like that. She's going to break this down for you. But I look at this idea that you've bought 6 properties since 2012 and 4 of them since you joined this community.
Yep.
What's going on?
Let's get on a buying spree.
What is going on? The education that we receive in this community from this show is amazing, right? I had read my Robert Kiyosaki books and I had been saving and scrimping with my husband, Renee, to get that very first property. And don't forget, 2012, we're at the bottom of the recession, right? It was like everything I could do to scrape together. I think it was 17 grand that we had to scrape together to put a down payment on this $83,000 property. And then I wanted to buy a property a year, but my finances were not such that I could. So I had to wait until 2017 to buy the next property. And then the show started in 2020 when the pandemic hit. And we're all like, on here. And then I had the fortune of GREGG coming out to Pebble Beach. And I'm like, okay, tell me about this self-directed IRA thing. And I was still scared about it because of course my financial planner was like, no, you don't want to do that. That's too risky.
Right.
So it was with the help of GREGG educating us in this show, Pablo also going along the ride. We're all learning together, right? Mm-hmm. And then Lee Bishop saying, I got this whole thing. I'll walk you through it. I'm like, okay. So because of what I knew about the show, and also too, I had some money scraped together. So we bought the property in January of 2021, but then it was 2022 that things really caught on fire because it was finally in January of 2022 that I got my money freed up from the stock market. And I remembered how upset I was because I lost 13 grand by just waiting a few weeks in January. Remember back then, like things were starting to go down.
Oh, yeah.
And I'd only lost 13 grand.
Yeah.
I'm so pissed. And then I was able to buy 2 properties in March with the self-directed IRA. One is the traditional IRA, and then one is the Roth IRA. So they're like different silos. That's a whole discussion about that. And then I was lucky enough to get my, what is it called? Employee paycheck, something about, it's like an ERC tax refund by being as self-employed. And I proved that I lost money during COVID. So then I got a nice little tax refund. Cha-ching, that is down payment on house number 6.
No way. I didn't know that. That's awesome.
I'm just hustling. I'm hustling to make sure that I have a portfolio of 30 properties by the time we retire. That's the goal.
That's
incredible.
Take us through what you'd like to take us through here.
Yeah, well, I think this is a really cool snapshot of the growth, not just of her portfolio, her and Renee, but just like growth as investors here. You just think about where they were prior to 2012. They took a big leap of faith to invest here, to invest with JWB, to invest in rental properties, probably overcame a lot, and then continue to growth, especially the last couple of years. So proud to see that. When you think about, I was going to start to kind of track and measure not just the number of properties that people are purchasing, but the number of properties that they're purchasing within the last 2-3 years. Because I just think that's a really cool win, like Jen was talking about as far as the community here. So very cool to see 4 Cents joining the community a few years ago.
Awesome.
Let's go to the next one. So we haven't seen one of these.
That's our very first property, Miss Muffet.
Miss Muffet. Miss Muffet is your highest return on investment property. Of course, these numbers do not include home price appreciation. We'll save that for the end here. But when Jen is talking about investing in renovated homes, this is a great example of a renovated home that is doing quite well. And so looking at the numbers here, I will be the first one to tell you, this is not normal. We are going to just enjoy it, celebrate it. But Jen, you have one of the highest performing properties in JWB history. Let's just put that out there. Your annualized return on investment. Every single year, your money has been working for you and producing a 34% return on investment. And again, that's not including home price appreciation. And this property has been owned since 2012. You only see a few years here, but you talk about consistency and duration and better risk-adjusted returns. Let's enjoy this one when the time is right.
All right, so let's talk about the lowest return on investment.
As wonderful as that first one did, let's talk about this one on Barmer. Because as raving a fan as you are, I think it's important for people to know that it is not all roses for you.
No,
right?
No, it's not.
Things do happen. That's a part of rental property. So I thought it'd be cool to kind of lean into that. This one on Barmer, it's had a rough year in 2022.
Oh, it's had some rough years. This is just the most recent rough year. But again, volume. It's about volume, folks, because if you only have one and if you only have two, when one's performing well and the other one isn't, you're like, rah, rah. But as you get volume, it's like, okay, so one's performing less, whatever. Like, who cares? It all washes out. But so yes, I was very lucky that when we closed on this property back in 2017, we had a person move in, like it was like around Thanksgiving. So like Thanksgiving weekend, this person moves in. I believe it was a single male resident. I don't know his story at all, but I'm guessing that it was his first time being a single man for a while, because the very first thing that happened was he was pouring hot grease down the plumbing, which created a lot of plumbing issues.
Not so bueno.
No bueno. And then we had to evict that resident. That wasn't fun either. But you know what? That's okay. Then we had this cute little military couple that was there for a while and they were gone, but then it got rented again. So there was a bit of a turnaround. I can't remember all the details, but we had to do some renovations because of that initial leakage, drain, plumbing nightmare. So whatever. But again, it's still positive. It's still positive overall, so I'm not worried about it. And it's one of the cuter properties too. I
think a couple of things, the value of having a portfolio that is more than one property, right? If you're an investor and you're thinking about buying one right off the bat, that is fantastic. We're going to start with one. There's nothing wrong with that, but you do need to have a plan in coming years to be able to add to your portfolio. Otherwise, it's going to be inconsistent, which is what we're trying to avoid. We're trying to get you out of the stock market so this can be consistent. You do need to have multiple properties, or else it's going to be really, really good for many, many years, and then 1 year you're going to have a bad year. And we're trying to avoid that.
All right. Well, let's look at the whole portfolio review.
So the coolest things, we take all the good, we take some of the bad, it all funnels down into this beautiful portfolio review of all 5 profit centers. And so, Jen, this is the full picture of how you and Renee have been performing, your portfolio has been performing, all of that good stuff with some of that bad stuff on Barmer, and you still have earned over $31,000 of net rental income. That's cash in your bank account, which is incredible over the last 10 years. You invest in the stock market, you typically don't make a dividend. Typically don't get any of that, right? So you certainly win there. Tax savings, you've saved over $6,000 in taxes that you do not have to pay, which is incredible. Principal pay down. We don't talk enough about this, but I love this one. This one's sneaky fun because you don't see it in your bank account. But Jen, when you log into your loan balance on those 6 properties or those 5 that are financed, it is way lower than what it was originally. And your amazing residents paid that down for you over the years to the tune of over $26,000. And then there's home price appreciation. You know, home price appreciation, again, we started the show talking about how Jacksonville has these fundamentals that make it a place that appreciates more than the national average: population growth, job growth, right? Well, you know, that's what's happened over, a 10-year period where Jen has been investing with us. She's earned over $259,000 in home price appreciation from her properties. And she's had 6, she's had 1 for a long time. The 4 of those are still relatively new. So just an incredible opportunity for you to see not just the things that happen on the cash flow basis or even on the tax savings, principal pay down. Home price appreciation is something you have to pay attention to when you see how much of your overall returns it comprises over a 10-year hold or over a 20-year hold, which Jen is on the path to doing. And lastly, inflation hedging, always something to keep in mind here now. Inflation is the core consumer price index is lower than what it was, but we are not out of the woods yet. 6.5% for a CPI is still very, very high. And if you have assets that are not earning 6.5%, if you got money in a checking account or a savings account or even bonds right now, and you're not earning 6.5%, you're losing. You're losing. Jen is winning here. You are beating inflation for sure. So your overall expected return on investment, when you made all of those decisions, the expected overall return on investment for your portfolio, Jen, was 13.6%. Your actual return on investment, your IRRs, are over 40%. That means your money has been working over 40% a year for you, have been your returns each and every year you've been investing with JWB here. So we are certainly beating your return expectations. And I'm so happy for you and Renee.
Oh, I'm so thrilled too. And for all those folks that have to deal with financial planners that tell you, well, we're providing 13% return with stocks. That's really good. We're doing great. And I'm like, yeah, I can do better in real estate. No. Real estate's scary. No, honey, you're just not making money off of me. That's why you don't want me to pull my money out. And so
Good.
These numbers prove that, yep, it's better than the stocks.
And you can do it in a way where I'm sure a lot of people told you it wasn't just financial advisor. I'm sure, I mean, if you're like me, I had family and friends that were telling me I was crazy when I first started to go down this path. I know for me, it was really gratifying beyond the dollars that I have made. It's the confidence in myself to know that I did it right, you know? And so it's been an awesome journey. Should we end up on that last wonderful slide that I always love to? So for folks, and this is largely geared toward those who might be wondering, like, how do you evaluate home price appreciation or cash flow or all this good stuff? The reason why you have to pay attention to home price appreciation when you're choosing the market to invest in is shown on a pie chart like this. And if you're fans of the show, you've seen this graph over and over and over again. I show it every time we do a client journey. What it shows is the percentage of your total return broken down by profit center. Most investors out there in rental properties only focus on cash flow. But over and over and over again, what this shows is that home price appreciation over a long term, a 10 or a 20-year hold, is going to be the majority of your overall returns. And so you can see for Jen's portfolio, over 80% of her returns came from home price appreciation. And you know which markets are going to do better for home price appreciation. So when you're thinking about where to invest, take into account the market, take into account home price appreciation, and work with a vertically integrated team. And then you can maximize your risk-adjusted returns on investment, just like Jen and Renee.
Yeah, if you're listening on the podcast, we talk about it all the time. It looks like a Pac-Man, right? Like the pie chart looks like a Pac-Man. Home price appreciation is the Pac-Man or Mrs. Pac-Man in this case. And the mouth of it is everything else, right? Rental income is about, half of it. Then tax savings and principal paid down are the other half of the mouth of the Pac-Man. But like the majority of the returns are happening from this.
I think people on the podcast totally got that. They got the mouth of the Pac-Man, half of the bag, half of the mouth. real technical terms there, podcast listeners.
It's quite the visual, but it's a really large Pac-Man with a small mouth, really.
There you go. Join the party. Come in here and hang out in NYAIS.com, and then you don't have to listen to it. Mouth of Pac-Man stuff.